Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back to another live stream. Thank you for being here. I just dropped that link in the chat. It is the DNA Funded 20% off with promo code A1T20. Don't miss that opportunity. They are offering some really nice prices on their 1 and 2 phase challenges they've got right now. So where are we at? Markets are higher. Go figure. We did get some earnings reports this morning from several companies. I believe we had UNH, which missed. UNH down here on a miss on their earnings overall. Pretty good miss. We take a look at the S&P 500 as a whole. Take a look at the lower time frames here for just a second. Drifting higher over the evening session or overnight session, but for the most part, still very quiet. The indices with the VIX trading at 15 or sub 15 at this point, 14.8. You've got an environment in which volatility is very, very low in this market. People are the stock market, the options market, everything is kind of moving a little quieter because we've had such a list of good news recently. You've had trade war concerns severely muted with announcements from Europe and Japan making deals with the US, China. Looks like, we've got just all sorts of the direction in the trade war stuff is peaceful, right? It's not wartime via economic warfare, right? We're not seeing trade wars. We're seeing the opposite. We're seeing compromises. We're seeing things working out between the US and its trade partners, largely welcomed by the market. And so in response to that, the options market went from panicking and volatility and everything, the dollar, indices, commodities, everything was moving like crazy over here, to what we have now, which is a very low volatility environment where things are just not moving very much. Some things are trending really nicely, just slow trends in certain ways. But I want to ask you guys, just as a community really quick, which environment do you tend to prefer? Do you prefer environment 1 or environment 2? And by the way, when I say environment 1, yes, we're looking at the volatility index, but this extrapolates across all markets, currencies, commodities, indices. Do you like environments where everything is moving like crazy, or do you prefer more of a quiet market? There's not a right answer here. There's not a right or wrong answer. There's ways to excel in both environments, but they're very, very different. If you try and use the same strategy in environment 1 as you use in environment 2, it gets ugly real quick, right? And vice versa. Volatility is very, very, it's the double-edged sword. If you're on the right side of volatility, you can make a lot of money. If you're on the wrong side of volatility, you can lose a lot of money. So just interesting to see. Seems like most people are more in the 2 camp. Alan prefers the VIX at 100. That would be insane. But yes, higher volatility environments are insane. They're just like everything moves so dramatically. Volatility messes up technicals. Yeah, I mean, at the end of the day, if you get this environment, like if you get a spike in volatility, support and resistance means nothing, right? It means absolutely nothing. If the market really wants to make a big move, like let's just say, for example, let's just throw something out there. I've got all these support levels drawn. If you get something like China saying we're not doing a deal with the US and we're moving in the opposite direction, like something, or China invades Taiwan or something insane, right? Something seriously changing the environment. These support levels mean nothing in a true fundamental sell-off. I mean, just take a look at what we saw in April. When trade uncertainty became rampant, there was no such thing as a support level that would hold. Support here didn't hold. Support here didn't hold. Support here didn't hold. So understand that technicals, you know, this is my opinion, and people have strong opinions on everything, but my opinion is that technicals bow down to fundamentals, not the other way around. Technicals obey what's actually moving the market, which is economies, corporate profits, and sentiment of the financial markets, right? People feeling like earnings can continue to grow for companies because environments look good, or people really scared about earnings because, again, something disrupts the status quo. So right now, if you ask me, Nick, is the market more likely? And when I say the market, I'm talking about the stock market, the indices levels. Are they likely to keep moving higher? Or are they likely to come down? Most of the time, the correct answer is the indices should continue to go up. But understand that as a trader, just because something might most of the time move up does not mean that the risk to reward heavily favors it at this time. So for me personally, the risk to reward buying the indices at what I believe to be very expensive levels relative to their earnings specifically, to me, the risk to reward skews not so positive for buying at these levels. Now, if you gave me, a 5% pullback in the S&P 500, which would put us at, let's see, where would that put us? That'd put us back at 6,100, give or take. That risk to reward level looks significantly more attractive to me than buying the S&P 500 after we've had such a strong run up. Now, again, the market could keep going, but that's not a bet that I'm willing to personally take in terms of adding new positions. So instead, what I've personally done is I've trimmed some of my positioning. I've trailed out of my Russell 2000 trade. I took profits on this one, right? So if we pull back, I have some dry powder, some availability, some margin, some cash, whatever you want to call it, in my portfolio. I have the ability to then take advantage if we were to see some pullbacks in this market. I'm sitting on, I'd say, about 15 to 20% cash right now, which is pretty high. It is in the market timing category, so I'm a little more cash than I'd like to be. What I mean by that, by market timing, is that when you're sitting in a lot of cash, that is essentially a similar concept to being not invested / almost being like short. So I'm not sure, I'm not like wanting to be short. So I am selling puts, cash secured puts on things if we do get some sell-offs, if we get some volatility. But that is how I'm positioned. I think the markets are a little stretched. You guys know, if you've been watching, I am a bull on this thing. I have been a bull, but I think it's also appropriate to say there's a time to be, rolling up the sleeves and buying stuff, and there's a time to be cautious and be defensive. And for me, I am a little bit more on the defensive side when it comes to the indices. Not bearish, but cautious. So with that said, that's my take on indices. A little stretched, not willing to short, but interested in pullbacks, if anything. Dow Jones sitting at those highs, testing major resistance at 45,000. We'll see if we can overcome that 45,000 level, or if we're going to pull back a little bit. I like the Dow if you get a pullback, but otherwise I probably can't justify anything at this time. Dow Jones maybe at 44,000 would look attractive. We'll keep an eye on that one. That could happen. And that's the thing, guys. Like, everybody gets used to the indices going up every day, and then all of a sudden things change. Volatility can expand rapidly and oftentimes does much quicker than people think. Just when everybody starts chasing Palantir, right? This is a company that has done phenomenal. Like, this is something you have to be careful about, is stocks like this. Again, phenomenal company, very cool company, but the stock itself is very expensive, like very, very, very expensive. And so while, again, I wouldn't short this thing, it's a reflection of market sentiment in some ways, where you're getting some very hot meme stocks just pumping and pumping. And Palantir is not a meme stock. It's a real company. It offers a really cool service and product, but the valuation of the company is insane. So for me, I can't justify buying these sorts of things. Great company. If it goes down 50%, I'd look at it. But for me personally, I can't chase things like this. Let's talk a little dollar. Dollar index is pushing higher. I think we might be, I've said this the last few days, I think we might be seeing a turnaround in the dollar. Trade deals secured. Economic heat map has been pretty strong for the US dollar. Let me show you that. So if I pull up our US economic heat map for a moment, take a look at this with me, and you can see what I'm going at here. Let's go line by line really quick. GDP statistics in the US, they were bearish for the dollar. They were a little bit soft. We get new GDP numbers coming up soon. Actually, what do we have today? I think we have JOLTS today. Yeah, we have JOLTS job openings in 45 minutes. So we'll see how that impacts. JOLTS last time around were really strong for the US. So we'll get to that in a second. Manufacturing PMIs, this forward indicating look at the economy, stronger than expected. Services PMIs, 50.8 compared to 50.8 expected. Neutral, came in line with expectations. Retail sales were stronger than forecasted, bullish for the dollar. The consumer price index, inflation came in line with expectations at 2.7%, giving us a neutral bias on the dollar. PPI came in bearish for the dollar because it came in softer than expected inflation. Remember, we're looking at the actual versus the forecast number. This is how we rate, or strong versus weak, each of our currencies, commodities, etc. We look at the data, the stuff that really matters. Next, we take a look at PCE. PCE actually came in a little bit stronger than expected, strong for the dollar. Wage growth came in soft, bearish for the dollar. Now we get into the stuff that looks really strong for the US dollar. Unemployment rate ticked lower to 4.1% than expected at 4.3%, bullish for the dollar. Initial jobless claims last time around came in at 217K, lower than expected. Remember, less people filing for unemployment claims. That's good. It's positive for the dollar. Let's keep going. JOLTS job openings. Last time, we'll get fresh data today. Last time were better than expected. Bullish for the dollar. ADP was not good. Bearish for the dollar. Non-farm payroll was very strong relative to expectations. Very bullish for the dollar. House price index, slightly lower, bearish for the dollar. And but mortgage applications up, bullish for the dollar. So there you go. Overall, the USD impact is positive. We're seeing some strength for the US dollar, which has not been there in a little while. And so when I look at the US dollar, the DXY, dollar index, I see a chart that has been trending lower, has now gone sideways, and is testing resistance here. So if I'm looking at the dollar, my opinion on this is if you're very bearish on the dollar, be careful, because we've seen something interesting happening. Let's take a look at institutional money moves, and let's take a look at the COT data history so we can look at what institutions have been doing recently. So recently, institutions have been selling the US dollar. Let me use a different color. Let's use white. Institutions have been selling the dollar, selling the dollar, selling the dollar. And then recently we've seen a little uptick, little bit of normalizing. Keep an eye on this, because institutions are not really heavily positioned one way or the other on the dollar. 45% long, 55% short. So institutions slightly lean short on the dollar, but it's really not substantial. So when I look at the dollar index, I do want to keep an eye. Of course, this data will update each Friday. I want to keep an eye on institutions to see if they start to accumulate a long position on the dollar, because if you get long accumulations on the dollar, watch out, because that is a lot of times, like, look at this. Institutions, they've been riding this downward trend very nicely, been selling into the dollar. If they start to shift, if institutions start to go the other way, and there's another thing I want to talk about. This is probably topic of the day for me. Retail sentiment. Let's keep it a close eye, guys, on what's happening with the dollar, because I have a forecast on this, and it's starting to happen. My forecast on this is that the dollar index is turning, because look at this. Dollar index starts moving up. Let's just really quick run through some FX stuff. Euro dollar starts trending lower, breaking support. Pound dollar breaking support. Dollar yen testing resistance. Let's see what happens there. Dollar Swiss coming back to resistance. Dollar CAD testing resistance, right? Hold on. USD CAD. I'm on the wrong USD CAD, so it doesn't have my chart. I want USD CAD. Oanda. There we go. Where'd that go? What the heck just happened? USD CAD. Add this. There it is. And I want to get rid of this one, keep this one. Okay, dollar CAD. Looks like it's testing the upper limits of resistance. So stick with me on this, because again, I think we are seeing something happening. And here's where it gets interesting. The Australian dollar against the US dollar, trending up for a while. Keep your eye on this for a second. The Kiwi against the US dollar, the New Zealand dollar versus the US dollar, moving lower. You ready? Retail positioning is shifting. What we see is retail sentiment is now shifting a little bit, where we see the NZD USD and the Australian dollar getting contrarian bearish signals. That's bearish the Aussie, bullish the dollar. Bearish the Kiwi, bullish the dollar. You see what I'm saying? Why? Because look at what the crowd is doing. The crowd is buying the Australian dollar and the Kiwi dollar. This to me tells me we may be on the cusp of a turnaround in some of these dollar crosses. Keep a close eye too on the we might as well have this contrarian bearish signal as well. The threshold in the EdgeFinder's retail sentiment is 60%. So look at this. Euro dollar's at 59% long. So retail is buying. Retail is buying on the euro dollar, and they're buying on the Aussie dollar and the Kiwi dollar. The reason I bring this up is that this is what we said a week ago. People were asking, is the dollar turning? And the thing that I've been waiting for is to see the crowd sentiment flip from bearish on the euro and the pound and the Aussie to start to go bullish. And I think we are seeing that. I think we are seeing that early on right now. We are seeing a flip in things like euro dollar, which is trending lower now or breaking a support level. Yes, it's been in a really great uptrend. But what typically happens, guys, is that retail starts to try and buy the dip at the worst possible time, just as the market starts to reverse course. Nothing is guaranteed in markets. We never know for certain what's going to happen. But my opinion on the British pound specifically, for example, and the dollar CAD, those two currency pairs look very interesting to me for some reversals. I think we see higher prices on dollar CAD. I think we see lower prices on pound dollar. That's my opinion. If you feel opposite to me, don't, let me completely dissuade you from, if you have a trading strategy or system that tells you to be long those things, disregard what I'm saying. I'm just sharing with you what I am finding in the sentiment, which is something that I track really closely as I watch retail sentiment, because oftentimes, and I hate to say it, but oftentimes retail traders are on the exact wrong side of something that's happening. So, by the way, this indicator is available within the EdgeFinder. We have many retail sentiment and crowd sentiment tools, as well as fundamental scanners and so much more. If you're new to the show, the software behind the scenes at this company that is running the stream, A1 Trading, we build tools for traders all over the world. We build positioning, tracking tools like what institutions are doing, what retail is doing. We also, of course, have a bunch of economic data screeners. If you don't have a copy of the EdgeFinder and would like to start using it, here is some information for you. We are currently running our biggest discount of the year on the EdgeFinder, and it is coming to a close in 2 days. So don't miss it. If you're somebody who's like, yeah, I want to pick up a copy, look, if you wait, you're going to miss it. It is 45% off right now for those who send us a direct message who are watching the stream at this moment. AACA says, get it. I have another thing to show you guys. We had a testimony this morning in the group from our friend here, Kestway. Says, thank you thank you for everything. I passed my second funded challenge thanks to the EdgeFinder, one for 15,000 with funded next, and now a second one with FTMO for 50,000. Congratulations. Love to see that stuff. Passed the FTMO challenge. Again, I don't want to set the precedent wrong. The EdgeFinder is not a magic box, but it is a wonderful tool for helping traders to spot more opportunities and to gain more insights on the trades that they're placing. We have people all around the world using it, and I want to make sure that if you're somebody who's like, I want a copy, I've been waiting to get a copy, don't miss it, because this sale is the biggest that we're going to be doing for quite some time, and it gets you 45% off. The best part of the EdgeFinder is it's a one-time payment to get access to the tool. You don't pay every month, you pay one time. However, for some people who are like, I want a copy of the EdgeFinder, but I simply can't afford the price, listen to this for just a second. We do offer right now, for limited time, we're splitting it up into 3 payments for people. So if you're somebody who wants the 45% off discount, you don't want to miss that, but you can't afford the full price now, do not miss the opportunity to get it in 3 payments. You can split it up if that is easier for you. We have wonderful support reps here at A1 Trading who can help to work that out for you by clicking the link right here in the chat or heading over to our website, a1trading.com. You can find out more, and they can set you up on a payment plan if that is easier for you to not miss out on the deal that we're running right now. Somebody asked about indices and commodities in terms of positioning. I'll show you. What we use for this, and this is, to me, the best way to track positioning, is the options market, because the options market give you a very, very liquid look at how people are positioned on the stock market, how they're positioned on oil, how they're positioned on gold, how they're positioned on silver. The best indicator that I have for this is the put to call ratio. Now, a lot of people have learned about the put to call ratio since we started showing it so often in the videos. And this tool to me is my favorite tool in terms of sentiment in the EdgeFinder. I have had the EdgeFinder for over a year, and it's the best indicator you will ever find. Thank you very much. Wonderful software, says Sahil. Thank you so much. I appreciate you guys. This is like my I don't have any children yet. I have 2 cats. This is my 3rd child. This is and the 4th one is the stock box, which is also really cool. And it's just a young one right now. Stock box is still young. EdgeFinder is coming up on its 4th birthday, which is, 4 is a good age. Actually, kind of a horrible age, but the EdgeFinder is awesome. Anyways, put to call ratio. Let me show you. So the stock market is sort of in neutral camp. As of the latest data, we have a balance between people buying puts, buying calls. Let's see if there's anything interesting in gold. Okay, gold is, this is interesting, guys. Crowd sentiment on gold seems to actually be starting to get more pessimistic. When this reading goes high, what that's telling you is that the crowd, the massive volume on the options market, is tilted in the direction of puts. People are buying puts. Now, puts in the options market are bearish bets and calls are bullish bets. Without being an options trader, that's all you need to know. When people buy a bunch of bearish bets, what is that telling you? Well, that's telling you that people think the market's going to go lower. So if the crowd sentiment is starting to get more negative on gold, I would take this as more of a contrarian bullish signal. However, that is not the only thing I look at in markets. I do also look at fundamentals. So gold for me is not going to be a trade at this time, but we're getting close. If you start to get stretched, if you start to get, some extreme readings here, there may be that opportunity to sort of go the other way and be a little bit more contrarian bullish. But that's just one indicator of the many that we look at. So the EdgeFinder kind of strings it all together. So it looks at a combination of sentiment, which is we've spent a lot of time today on sentiment. It looks at technicals like seasonality and momentum, and it looks like at economic data. So it combines all of this stuff together, right? And we could get down into the weeds if you go to the top setups page, right? You can see all the different scoring mechanisms. It's looking at CPI, it's looking at PPI, NFP, GDP, seasonality, retail positioning, commitment of traders data. It's looking at all this stuff, right? So I like to look at the simplified view, especially on YouTube, because I think I don't have to go into the weeds with everything, and I can just show you guys what we're finding here. Gold is not on the list. If I include it in neutrals, there is gold, right? Gold is neutral. So gold is getting a neutral reading, meaning that it's just not quite. What's really costing gold right now specifically is the fundamentals. The economic data suggests dollar strength right now in the eyes of the EdgeFinder, right? So gold is not going to be a trade for me. Sentiment looks good. People are kind of getting bearish on gold. The crowd seems to be getting bearish on gold. Institutions are long gold. I like that story. But remember, we don't do everything based on just one indicator. Intelligent trading means stringing together as much information as I can to make an educated guess and then aligning it with the technicals. That is what we do day in, day out for years on this channel. We don't have certainty. We don't have guarantees. We are trading probabilistically, combining the data that we can, using software to expedite the process. What is interesting to me that I want to cover before I pass the show over to our next show host, which is Marco, we have oil getting a bullish reading. I mean, it's been a bullish reading, but getting a stronger bullish reading here. And I do have a USO long position that is off to a really good start here. This trade is up $3,700 at this time. I'll take a look at oil spot price and you can see really nice push off of this area of support. I do think today what I'm going to do, we had a very confident close above this area here. I'm going to take my stop loss and I'm going to actually reduce it. In fact, I'm going to do that right now because I'm about to end my segment and throw it over to Marco. So I'm actually going to just here in front of you guys before I forget. We're going to trail this stop loss, and let me just do that. Good till canceled, 1,500 shares of USO, send order. All right, so that is adjusted, and this is a distance from my stop of 2.4%, let's call it. So we're going to adjust this to account for 2.4%. Just right there to visually represent that. So what I've just done is I've trimmed my risk, right? So I've trimmed the max potential loss that I could take on my oil trade. I still have risk on this position, but I am locking in, or not locking in anything. I'm just taking advantage of this move higher to reduce my risk. I like the setup. I think oil has more upside, but again, we never know with certainty what's going to happen in markets. So I'm just going to trim my risk a little bit. We have a nice move here. Let's see if we can follow through. Next thing I'm looking for, breakout here above 69 or 70, somewhere in this range. If we can break through that level, I will be locking in further profits on this oil trade from here. If you would like to follow along with the signals that we are sharing, heads up, our next show host has just joined the crew at A1 in terms of sharing trades. So let me just show you this really quick. We've got announcements here, an announcement yesterday from Julie and an announcement from myself too, that Marco is joining the crew at A1 as a lead trader within the Discord. Of course, going to be involved in the chat rooms and sharing his trades and ideas with members. So that is coming soon to our group. Stay tuned on that. I'm very excited to have him on the team. He is a great fit. And I encourage you guys to stick around and hang out with Marco if you aren't familiar with him. He's going to be taking over the show. Last thing I'll say about this, remember, EdgeFinder and VIP are both on super sale right now. It's 45% off to come join us. You can join ahead of Marco joining the group and get access to the EdgeFinder, 45% off for a limited time. We'll drop the link. There it is. Boom. Send us a DM if you have questions about it. And up next, we've got Marco taking over the stream. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So I hope everyone is doing well. And I'm watching the comments on the side. So if you have any questions, any chart requests, psychology, risk management, strategy questions, make sure you put it in the chat. So I will soon be joining the A1 team, which I'm very excited about. So I want to thank the A1 team and Nick for inviting me. And yeah, let's get into the stream. I'll also try to stream on TraderNext channel at least 2 times per week. In terms of the markets, so what has been happening with the markets? Hello, Lauda. Well, we have a lot of news upcoming for this week. A lot of news. The most important news is for the USD. So we're getting the Fed press conference and the Fed interest rate decision. So a lot of traders are watching this because we still have 2 rate cuts priced in for 2025, but it is not yet certain if those rate cuts will actually happen or if the rate cuts maybe won't happen, if there will only be 1 rate cut or maybe even 0 cuts for this year. Again, no one really knows, but currently we still have priced in 2 rate cuts. Okay, so for this beginning of the stream, I want to take a look at the dollar, so the DXY, and I want to take a look at the S&P 500. That should give you or give us a nice reading on what is happening in the markets. Hey, FX Bashi, thank you very much. Also, what I want to mention, we had some trade deals. So we had the EU and the US trade deal. what is pretty interesting is that the euro sold off on this news. See, and the DAX, which is the German stock market, initially sold off, and then now it is gaining some value back again. So you would think that this would be possibly positive for the euro US dollar and positive for the DAX, but maybe it was the case of buying the rumor and actually selling the news. So yeah, now let's take a look at the DXY, which is kind of the most important chart, in my opinion, during these times. A lot of people are short. So a lot of traders, a lot of investors have been short on DXY, have been short on the dollar, and we're betting on this downtrend to continue. Well, what we recently had yesterday and today, we're getting a really bullish reading or a big bullish move on the DXY. So the dollar is essentially gaining strength. We can also paint a trend line. So if we can do that here, you can see this was the initial trend line. It got broken. Price kind of broke up, retested it, and now it's moving even higher. So I think we have been talking about this for the last couple of weeks, that not every, but most retail traders and a lot of investors were short, which could give you a nice bullish signal. So when everyone in the retail space is short, usually the price goes in the opposite direction. And now we have started to see that move. It makes sense because the dollar has been heavily oversold in the last few months. So I would actually expect this momentum to continue to the upside possibly. We're also getting some good fundamental data out of the United States. So data like GDP, employment, inflation data. It is mostly coming out bullish. So if I'm checking the EdgeFinder, I can see that 62% of the fundamental data that is coming out more bullish for the dollar than expected. Also, inflation is looking good. It's kind of possibly a little bit elevated on some readings, but it is still not a big problem. The problem is for the rate cuts. For the rate cuts, we need to see bad, let's say, employment data, bad GDP data. And then for inflation, we need to see inflation going down. We need to see inflation steadily going lower for us to be confident in rate cuts. Okay, so right now, because of good employment, good, let's say, GDP, and in general, good US economic data, also inflation being a little bit sticky, we may not even get those 2 rate cuts, which is then hawkish for the US dollar. So that gives you a hawkish Fed, a hawkish central bank, which makes the dollar go up. So those 2 conditions, those 2 criteria, first one being that the dollar has been heavily oversold, and I mean really oversold, and second one being that the rate cuts are not 100%, like the confidence around rate cuts is not 100%. So we may actually get the dollar going up. We may actually get only 1 rate cut or maybe even no rate cuts in 25. That's what you're seeing. I can see the price definitely pushing higher. As I mentioned, we broke that key trend line. And for the short term, I'm actually bullish on the dollar. I do think we could go up a bit more. I do think we can hit some levels, maybe even to here. But long term, I think we should move lower in the DXY. So something like this could happen because rate cuts, in my opinion, will eventually come. Maybe not in 2025, maybe in 26. And you have the big, beautiful bill from Trump, which is going to introduce massive spending, massive increase of debt. So that all could make the dollar lose value. So that is for the DXY. So short term, I'm a bit bullish, but long term, I'm bearish. For the S&P 500, this thing is just steadily climbing higher with quite a lot of momentum. So the S&P 500 is looking quite healthy right here, okay? We had this massive uptrend. I've been trying to catch some buy setups on the NASDAQ. I never got a pullback, and we seem to be just continuing higher. I think a lot of traders expect a pullback. I know Nick expects a pullback. I know Chris also is talking about a pullback. And well, I'm looking at the same thing. I want to buy into the US stock market, but I want to get a bit of a pullback first. So I want to see a pullback, preferably on the NASDAQ, because I believe the NASDAQ is a great play in 2025 and 26 because of artificial intelligence. The companies that are going to benefit the most from artificial intelligence are going to be technology companies. So we're talking about Microsoft, Apple, NVIDIA, and companies like that, okay? So they're going to be on the forefront when it comes to artificial intelligence, and the NASDAQ is comprised of technology companies. So I believe this index has the most potential to go up. But I would like to see a pullback, specifically to, let's say, this level of support, and then I would consider some buy setups. In my opinion, we are a little bit overbought right now, so we have just been going higher and not really pulling back. Let's check the S&P. We have not touched the 20 EMA for quite a while. So for quite a long time, we haven't touched the 20 EMA. And this sort of momentum usually does not last for long. I mean, to the downside, it can really be a huge swing, but to the upside, we usually get a pullback. We usually get some sort of a grind to the upside. So yeah, I don't really want to buy on the highs. I would prefer to get a bit of a pullback first, and then I would get in. But overall, because of the strength of the US economy, because of the good fundamental data we are currently getting, and because of artificial intelligence, especially for 25 and 26, I'm overall very, very bullish for the US stock market. So let's see some questions. Okay, so hey, Laffy. Hey, Bernard, what's up? Okay. Which indicator are you using? So the indicator I have on my charts is called this one, the GT recent high low. It just helps me to spot swing highs, swing lows, and it helps me to spot where the previous swing highs or swing lows have been broken. It makes the most sense when I'm trailing my position, when I'm trailing the stop loss, for example, like I did on silver. I got in on a buy setup here on the 24th of June, and then I just kept moving my stop loss below the swing lows, and my latest stop loss placement is right here below this swing low. So yeah, it's a good indicator. It's not needed. You don't it's not a deal breaker for me. The indicator that is kind of very important is the EdgeFinder, okay? So that really gives me a massive fundamental confluence. Richard says the EU got screwed over, so the euro melted. Yeah, I mean, that could definitely be the case, that people are not liking the 15% tariff, which, if you think about it, it is quite high for a tariff. So you could say a lot of people sold the euro because they don't like the 15% tariff. But again, the DAX is recovering. So if you look at the daily chart, euro dollar is just kind of crashing out of the sky, which is also to be expected because you have the DXY gaining a lot of strength. So pretty much the pound is going lower. The Aussie is also losing value. So it's not just isolated to the euro. The dollar is gaining strength across all of these currency pairs. But the DAX is recovering a little bit. So I would say the DAX is just ranging inside of this area, inside of this flat area right here. So you're not really getting that sort of a big adverse reaction that maybe you're thinking about. Yes, we got a massive red candle on the daily, but we are now currently recovering. And I would say if you zoom in a little bit, like on the 4 hour, we are just ranging around. Okay, let's remove this. We are just moving from the bottom to the top of this range. So it's not really massive movement. Massive movement is not really happening. And I'm in a buy setup on the DAX, which is running a little bit of profit because we had really good fundamental data out of Europe, some really, really good fundamental data. And I was counting on the daily chart to continue up. So I was counting on the big uptrend on the daily chart to be honest with you, I was also counting on a trade deal between the United States and Europe, because then if a trade deal happens, the uncertainty is gone, and it should be bullish for the DAX. Okay, it should be bullish, and I think long term, it's much better to have a trade deal and to have a set 15% tariff than to have massive uncertainty, and then investors don't really know what's going to happen. You can get a lower tariff, maybe you get no tariff, but you can also get a 30% tariff. You could also get like a 50% tariff, especially with Trump. So it's much better to have a written agreement of a fixed 15%. It gives investors more confidence, in my personal opinion. So you should make a video on how big investors firms day trade. Okay, that would be an interesting video. I'm going to have to look into that. So I had thought the trade was going to be good for the euro. I would have thought so as well. But as you can see, the dollar is gaining strength across the board. So I don't think it's such an isolated move on the euro. The drop is not an isolated move because it's dropping on multiple currency pairs. And it could be the case of buy the rumor, sell the news. It could also be the case of investors and traders thinking 15% is quite a big tariff, so let's sell the euro. It could be a lot of things, but again, in the markets, you're never going to be 100% wrong. Even if you're right just 50% of the time, if your winners are bigger than the losses, it makes sense. You'll still make profits. What length are you using for the moving average? It's a 21. Okay, it's a 21, or no, sorry, I think it's a 20 MA, but it doesn't matter. The specific number doesn't matter. It's a 20 MA. It's just an added bonus, an added indicator to help me spot when the market on the daily chart is overextended. For example, let me show you the NASDAQ. I believe right now the NASDAQ is overextended. The market is pretty far away from the 20 MA, which means, and it has been like from the 23rd of June. Let's see. So for 36 straight days, we have been above the 20 EMA. Okay, so I would call that market a little bit overextended, running a little bit too hot. So we may get a bit of a pullback, which is what I'm personally waiting for. Okay, let's see the comments. I don't agree on the EdgeFinder being an indicator. It cannot give you entry, exit, or stop loss points. Well, an indicator, even on TradingView, does not give you, at least most of them, they don't give you exact areas where to enter and the exit, but it gives you an edge. It gives you a bias. It gives you a percentage or a bias that, let's say, there is a 60 or a 70% chance that the NASDAQ will continue moving up rather than reversing lower. For example, right now it is bullish on the NASDAQ. And that's your edge. And that's the most important part of trading. I would say the actual entry, stop loss, and take profit don't mean anything if you don't have a trading edge. And acquiring a trading edge is the absolute hardest part about trading. Most traders do not have a trading edge. That's why they lose money. Okay, USD JPY. Okay, USD JPY. Let's do USD JPY and gold. We have gold request as well. So let's look at first UJ. So on the daily chart, well, I mean, both currencies, the dollar is definitely bullish right now, in my opinion. But for the yen, I believe the research I've done that the rate hikes could continue. So we already had some rate hikes, and we could see even more rate hikes from the Bank of Japan. So because of that, I would be a little bit careful with buying UJ because I'm kind of bullish on both currencies. If you're looking at the EdgeFinder, dollar is now in the bullish territory. The yen is getting there. Okay, the yen is getting there into bullish territory. I don't want to bring up EdgeFinder right now. It's kind of going to break the stream a little bit. But I'm watching it on the side, and that's the reading I currently have. Because of both currencies, in my opinion, in terms of fundamentals, and you could say the macro, or interest rates are bullish right now, I don't really want to go long. I do have my alert right here. In my opinion, we could see this pair range around a bit more in this area. If we do break the high with conviction, I will reevaluate my position. I'll reevaluate my stance. Let me check if I type into the top setups. If I type in UJ, so USD JPY, what will we get? Neutral. Yeah, we're getting a neutral bias. So it makes sense. It makes sense with my analysis as well. So I'm neutral on USD JPY. I'm waiting for more clarity. I'm looking at what is the Bank of Japan going to do. I'm looking at what is the Fed going to do. You know, that's still a big question. We do have a meeting. I think it's tomorrow. So we do have the Fed meeting. Nothing much is going to be said, in my opinion. It's going to be mostly a neutral meeting, kind of a nothing burger meeting. So we have to wait maybe all the way to September to see the potential rate cuts and to have a definite bias on the US dollar. Right now, it's pretty much in the air. So that is my conclusion. That is my stance on UJ. It is a neutral stance, you know, a bit of a neutral stance. I think there are some better currencies to trade. If you want to go long the dollar, there is USD CAD. So USD CAD on the EdgeFinder is getting a nice bullish reading in terms of fundamental data. And I'm watching for a breakout. Okay. So I'm watching for a breakout like this, and then some sort of an entry on the 1 hour chart. But I definitely want to see this key area get broken with some nice strong momentum. So that is it for UJ. Gold, I'm in a trade on gold, or sorry, I got taken out, I believe. Let me see. On my FTMO, I got an email that I got taken out of the trade. Yeah, I'm out. So I'm out of this trade because I did move my stop loss recently. I did have a buy position running from the 10th of July. I did like it because it had a bullish reading on the EdgeFinder, and it was a nice hedge. If we got some more tariff drama, it was a nice hedge against my risk on positions such as the DAX. I have some SP500. I have some Bitcoin, I have some Ethereum long term, and I had a trade on the New Zealand yen, which was also a risk on trade. See this one. I got taken out recently for a win, but the gold buy was sort of a trade to offset these positions and to keep me safe, to keep my account safe if we got some drama around the tariffs. So I know we got a deal between US and EU. I know there is talk of a deal between US and Japan. I don't think it's fully done yet, but most likely it's gonna get done. Okay, so most likely it's gonna get done. If it didn't already get done, I'm gonna have to check up on that news. So gold is gonna sell off on that news, right? Because gold likes uncertainty. Gold likes massive threats from Trump, massive potential tariffs from Trump. That's what makes gold explode. That is why you saw a big explosion in the value of gold in 2025 because of Trump and his shenanigans. But now it's selling off because we're getting some certainty and confidence. And also, if you look at the price action on the daily chart, it is flat and range bound. So when the price action is flat like this, usually we move from the bottom of the range to the top and just keep ranging around. So what is needed for gold to break out, to move up, or maybe to even a sell-off heavily? You need a catalyst. So now we need a big catalyst to see gold move. Okay, maybe this overall uptrend will continue eventually, right? We're still in the daily, or on the daily chart, we are still in a heavy uptrend. But the trade deals are bearish. Let's not kid ourselves. They are definitely bearish for gold. So they give confidence back to investors. They remove uncertainty, and the gold likes uncertainty. So we're getting a sell-off on gold, right? So I would say I'm neutral on this one. I'm neutral. I would not expect a huge move up anytime soon. I like silver much more if I'm going to be a bull. Okay, if I'm going to look for buy setups, I like silver much better because gold, in my opinion, has already had a pretty massive move. Silver, not yet. Silver hasn't moved yet. It had a good move, but not as big as gold. So silver could be a nice catch-up trade, could have nice follow-through in the upcoming next few months, okay, weeks or months. That's why I'm in a buy position and just trailing the position. Okay, so let's see. USDN shorting right now. Okay, what will you say about GBP CAD? Let's take a look at GBP CAD. Let me first take a look at what is the EdgeFinder saying. So GBP CAD. Bearish. Okay, we're bearish on the EdgeFinder. I haven't really taken a look at GBP CAD. So, I mean, it looks a bit flat on the daily chart. If I was going to look for sell setups, and because of the bias from the EdgeFinder, I would consider sell setups on GBP CAD, I would like to see the price break these key lows. Okay, break the key lows. If I'm going to look at the economic heat map or the economic surprise meter, CAD is actually weak. Pound is kind of at the 50%. But yeah, GBP CAD, the EdgeFinder is bearish, but I would first like to see a break of these key levels and then look for sell setups. So I think we are now at a crucial level of support. So I would be patient until the price breaks those lows. Trading edge is okay, but one must know where to enter, where to put stop loss, and where to exit. You're 100% correct. But I would say if you already have a good trading edge, then discovering where you will enter, exit, and take profit is the easier part. The hardest part about trading is, of course, getting capital, and it is getting a trading edge. Most traders, they don't have a trading edge. I know because I've spoken to many traders. And when I ask the question, what's your trading edge? They just don't, they aren't sure what is their answer. And if you aren't 100% sure what your trading edge is, you don't have one. Okay. So a gut feeling is not a trading edge. You have to have specific reasons that you can list, that you can note down on a list that give you a reason to enter or exit a specific setup. Okay, so let's see. If the Fed decides to keep rates the same, what do you think will be DXY's reaction? Would this keep dollar going downward, or will the recent bullish data carry the weight? I think if they start to project 0 rate cuts for 25, I think the DXY should go up. I think the dollar should gain value because that would be a hawkish move from the Fed. And again, currently the markets have priced in 2 rate cuts. So if you get no rate cuts, in my opinion, there will for sure be a reaction in the dollar, a repricing in the dollar, and it could gain some value. So I think that would be a bullish reaction on the dollar. How do you calculate risk management on prop firms? I use a Forex size calculator. It is basically the, let me see. So if I go here to the new card, my FX book. So my FX book Forex calculator, that's the one I use. GBP CAD, what about silver? Is that an ascending channel on gold? Okay, we have JOLTS. Let's see. JOLTS on the dollar. Let's see, 1 hour. Let's do the 5 minute. Yeah, okay, we have JOLTS job openings, which should update also. They should update in the EdgeFinder. Again, this week is full of news. I'm nearing the end of my segment of the stream. So for this last part, I read that you guys are seeing a bit of an ascending structure on gold. And I would actually say that this is not really ascending, this is a flat range. Some people call this a bullish flag. And traders say, I think Chris Pulver says that this is actually more bullish than if the price moved down sort of in this descending fashion, because this could be called consolidation before a breakout. Okay, so it could be called consolidation before a breakout. So technical analysis on the daily would say that this is bullish, right? So that would be the technical bias. And so we ran through silver, DAX, gold. Gold, I got taken out, so I'm no longer in this trade. It was around the break-even position. Silver, I'm in, I'm trailing it. Again, for silver, fundamentals, I'm not that bullish in terms of fundamentals because we're getting all of these trade deals. But I think silver overall on the daily chart is in a nice uptrend. We had a breakout out of a flat range with conviction. And also gold already had a massive move up. So silver could follow. Okay, let's quickly check on the reaction on the euro dollar for the JOLTS job openings. And then I'm going to pass the stream to the next guest. Okay, so a bit lower than the forecast, but still pretty close, pretty close and lower than the previous numbers. So if you want to see what this does to the EdgeFinder reading, you can see it in the software. JOLTS came out lower than the forecast, correct, and lower than the previous number. So thank you very much. See you guys tomorrow. I'm live streaming tomorrow as well, and have a great rest of the week. Watch out tomorrow for the Fed. Okay, watch out for the Fed.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Good afternoon, ladies and gentlemen. Hope you're all having a good start to the week. So we had JOLTS come out at 7.44 million. So definitely an undershoot from the previous and also the forecast. However, the dollar seems to be holding up quite well. Not really any reaction. We did have a bearish, the previous hourly candle was bearish. Current hourly candle seems very, very unaffected, to be quite honest. However, I've got no idea what consumer confidence has come out as. So if anyone's got the data for that, let me know. If not, I'll have a look on Forex Factory in a couple of minutes. So just leading off from what Marco was saying about the rate decision by the Fed, we've already got an idea here by Bank of America. So this was from the 23rd of June. Basically just saying that they, let me just find the line here. Markets moved on as they increasingly discount headlines until they become indisputable facts. But these developments go in line with our view that the US economy will avoid a recession and the Fed will not cut rates this year. Then we got a follow-up on that, again from Bank of America, basically saying that they have doubled down on that idea. So they are not expecting any rate cuts this year by the Federal Reserve, which is interesting. I mean, I've been saying it for a couple of weeks now. I'm definitely not expecting a rate cut this month. However, September, it could be different. Okay, so you guys are saying, if I don't even know what the context is here, let me pull up Forex Factory. I don't know what the previous was off the top of my head. Today is what we need, 97. Okay, well, this will be a bolster for the dollar. So I assume that's why we are seeing, yes, lower JOLTS, although the dollar is remaining very stable here due to a positive consumer confidence. Excuse me, sorry. So who's enjoying the dollar bullishness? Some of you may remember I was quite bullish on the dollar back on this weekly candle here when we had the doji. But you know what? It's just typical, absolutely typical. I had a pending order here on pound dollar to sell at, it's pretty much 136, but I just moved up slightly to be in line with these lows and this previous high. I was traveling, market moved up and missed my entry barely and decided to start running down. So I'm not in the best moods about that. So it's just one of those things about being a trader. It's like you could have an idea that works out amazingly, but it doesn't matter if you're not in the trade. So I've still got this order here because we do have the Fed decision tomorrow, and that will give us forward guidance. So maybe if some spanner is thrown in the works, I might be able to get tagged in. But again, the context behind the trade might completely change in that case. I'm not sure if I even really want to be in it, but for now, it's still active, so I'll see what I get. But yeah, Fed guidance tomorrow, I would expect it to be same old, same old. We're not cutting rates. Rates are hold or rates are held for data dependent, blah, 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 blah. Inflation this, labor market that. It's just just same old that we've been hearing the past couple of meetings. September, I think, in my view, heavily depends on the data we get on Friday. So let me pull this up for you. This week, we have got very typical Friday with average hourly earnings, unemployment rate, and the big boy that everyone loves, non-farm payrolls. So that will be interesting. And manufacturing PMI as well. So Friday will be a big decider. Well, not a big decider. It will be a big indicator to what we could expect from the Fed going forwards. You had a very similar thing marked on GU. I think it was very textbook, really, because we had... hold on, I'm stuttering. It was the same thing on things like Australian dollar wasn't the same setup, but Euro dollar had a very similar price action behavior. And it was a case of, okay, they both rallied heavily. They're both relatively overbought on a technical view. COT data was extremely stretched. It was just a case of how big are your nuts? Are you gonna take that risk and buy this bottom of the dollar? And if so, I would have completely stood behind you. I think it would have been a little bit aggressive for me personally, which is why I didn't do it, but I would have understood it. So I was just waiting for really a confirmation, whether it be this lower high, which is exactly what I was looking for, or data or developments in the data, whatever it was. I don't care. But yeah, that was the idea really behind it. But yeah, there you go. It is what it is. Anyway, moving forwards, let me just double check the EdgeFinder, make sure it's not changed. It's not. So we've got a theme, and you might be able to see the theme on my watch list. So we've got pound Aussie, pound Swiss, pound CAD, pound yen, pound New Zealand. Can anyone guess what the theme is? If you've got EdgeFinder, you will know. Code elite for a discount, by the way. Well, you know, it's looking like we should sell the pound. I mean, look at this: pound CAD, pound Aussie, pound dollar, pound yen, pound Swiss, pound New Zealand, all bearish readings. So that's lovely to see. I've been a bit of a perma bear on the pound for sort of the past year and a half, really. So I love to see it starting to decrease in value because it's a bit of a meme coin, to be honest with you. This country is an absolute mess in terms of the leadership and things. Anyway, let's not go down the political road. So I am looking to sell pound against pretty much every other currency, or every other major currency anyway. So pound Aussie, I would love to get short in two situations here. Either we have... trusty brush tool. Either we have a breakdown below the 200 moving average, below these previous lows, and we can come back up, retest, and that would be a very bread and butter textbook break and retest pattern. And it lines up the EdgeFinder. So how much nicer could it get? Not much nicer. The best outcome, however, would be if we stay in this range and then we do that, and then I can sell at the top. That would be perfect. But, you know, we don't go for perfect. We go for what pays. And in this situation, we just have to wait and see. Pound Swiss is tricky because it's very heavily sold off at the moment anyway. I mean, we're at, how long has this been going for? Back in 2020. So this is a 3-year low that has been pretty much failed to break. We've had some slight breaks below, but nothing's managed to hold below. So it makes me very uneasy being a seller right here. So to be honest, I would really need to see some sort of pullback into the 200. Also, a 50% retracement here, or something within this Fibonacci golden zone would be great. And then we can look to go short there. Either way, I'd be looking to be a seller as long as we can have a reasonable pullback. Pound CAD, exactly the same as the pound Aussie. So we'd be looking for a breakdown, retest, and a continuation lower. Or we come back into these highs. And if the fundamentals are still supportive of being a short seller, then we sell the top. Or in theory, we sell the top. I've seen a couple of messages come in. I'll read those in a second. Pound yen. Now this one's interesting. So I'm going to put you guys on some source. Just bear with me. I don't want to leak my files. This could pay quite nicely, but it also could be a bit of a mess. So please don't follow this one-to-one. But I'm actually going to put this on pound, on dollar yen here. So as anyone that watches this stream frequently may have heard Nick and I talking about the yen, and this was, I think, last week or the week before. We were talking about dollar yen could definitely see upside, but long-term downside is definitely possible. Now, Nomura, which is a institution, have exactly the same theory. So I'm not going to read all this, but just to quickly recap, they're basically saying that the trade development between the US and Japan, so obviously they came to a trade deal, is beneficial for the yen. They're expecting better data to come, and both of those things will be a catalyst for the Bank of Japan to start hiking rates again. They also see further downside on the dollar. I don't know if I see further downside on the dollar just yet anyway. So I'm not really going into that trade, but I've got it marked up. This is their exact position. Actually, the take profit's not there. It's much higher. I think the take profit's somewhere around here, 143, give or take. But yeah, their entry is at 147914 and the stop loss is at 151. So if you want to mark it up, feel free to. Again, it's not my trade. This is from a bank report. But that does lead me on to pound yen. So just with that similar concept in mind, that the yen, the Bank of Japan could now start hiking rates again and continuing their path to normalization if we do see that data start to support it. It doesn't right now, but it definitely could. And of course, pairing it again with the EdgeFinder reading here with a pound yen with a very bearish reading of -10. The price action or the current price level, I think, is really, really nice to sell from as well. We've got this sort of triple top area. Price has failed multiple times to come any higher. I actually want to see, is this I don't think this is a fib level. No, it's not. That would have been lovely if this was like a 50% retracement. But either way, I think we may be able to get a really nice short here. I think I may take this later today or tomorrow. So that's on the books. Pound yen is really the only one I'm actually interested in right now. The Dow, I'm also looking. I'm not actually in any positions right now apart from the euro pound short here. I'll go into that in a moment. But yeah, the US 30 or the Dow Jones, I was expecting to see a breakout of these highs and continue higher. And the reasoning behind that is very, very simple. I think it has a little bit of catching up to do. So if you look at NASDAQ, Dow, S&P, all of them obviously had the tariff crash, whatever you want to call it. They've all recovered and they've all surpassed and now created new all-time highs except the Dow. The Dow is the only one that's not done that. So leads me to think we could see some more upside on the Dow, just sort of a bit of a catch up really. But again, I'm not in yet. So I'm just looking to see if we can catch something like that. And then on NASDAQ, just looking to see if we can get a retracement back into the previous all-time highs. And again, break and retest, and then look for that continuation higher. We do have this RSI becoming a little bit overbought. Doesn't mean that much, but it could be a sign that we might be able to expect a little bit of a pullback here, which would be very, very nice. It happens, James. It's a bugger when it does. Lee, it absolutely is. Yeah, it's not fun. You had a very similar thing marked out in GU. Unfortunate, Luke. At least we can enjoy the pain together. We can sit and take a moment of silence for each other. James, the FTSE's up 12% this year. Is it? Let's have a quick look. So the reason I don't like the FTSE is because I think it's just a bit, so what I like to do, my explanation for that is if we just compare, because we all have access to invest in either the FTSE or the S&P. So what I like to do is just this. So it's just comparing their growth side by side, obviously. So the pink line here is the S&P, and obviously the price or the candlestick chart. The candlestick chart here is the FTSE. So regardless of what the FTSE does, it's just not as good as the S&P. So let's just have a quick look from year to date. So February 2nd of January was roughly there. Interesting. So I think actually, yeah, the FTSE might have outpaced. Sorry, just bear with me. I don't really look at this very often. It's down here. Again, I drew the S&P one quite well. Yeah, okay, fair enough. Maybe in this case, the S&P, the FTSE may have been a better call. But yeah, anyway, the FTSE's done well. Also, the AstraZeneca, I think I pronounced that properly. AstraZeneca is a UK stock. They had earnings that really helped the FTSE as well. I think it was it yesterday or today? I can't remember. Euro yen, please check and your view. I don't really have a view on euro yen. I would expect more downside. I'm no longer interested in taking a long. So the reason I'm expecting more downside to come is because of very typical sort of capital flows or liquidity flows, whatever you want to call it, it's fine. But you know, I've shown this quite a few times in the recent weeks, but I'll do it again here. So if we just take the dollar, which is this chart here on the top right, and the chart here, which is the euro on the bottom right. So if we just look, where did the dollar top? Well, it topped pretty much on the 13th of January. Where did the euro bottom? Yeah, around sort of, if not pretty much the same, 13th of January, sort of 6th of December, give or take. 6th of January, give or take. They're inversed, really. So when the dollar is super strong, generally the euro is very weak, and vice versa. When the dollar has obviously had its recent drop this first half of the year, the euro gained significant value. So if we are expecting the Fed to continue holding rates, the data is overall much better than what was expected during this sort of panic sale, as well as trade deals coming, which is again a bolster for the dollar. We can obviously expect the euro to start decreasing in value as the attention goes back to dollars or the US. So I've got no interest in buying euros. I don't really think anyone has much interest buying euros right now. I think focus really is dollar and US equities. And it's the same thing actually. When we had the trade deal for Europe and Europe and the US come out, and go to the 1 hour. Yeah. It was here. So we saw the initial spike on market open, and it was like, oh my god, they came to a trade deal. DAX is going to rocket, the euro is going to rocket. But then you have a think, and you sit back and say, okay, actually, why would this benefit Europe? They've still got tariffs put on them. What was worse affected during this period? Well, the dollar was massively affected. The dollar saw one of the worst starts to the year in history, or recent history at least. So if one of those weights on the dollar has been lifted, the dollar is going to do very well. And what happens when the dollar does well? Well, generally speaking, general rule, euro does very poorly. So yeah, it was complicated to say the least, especially for newer traders, because on the surface, again, it does sound like it's something that you would expect Euro DAX to do very, very well from, but they didn't. The euro dollar plummeted. Well, yeah, plummeted, depends on time frame you use, but didn't do very well at all, and continues to plummet. Max had a sell stop on GU, had to close it because I validated my two-step prop firm. Wait, when you say you valid, Max, do you mean you passed it or you violated or what? I'm not sure what you mean by valid. I'm not sure if to celebrate for you or if to say I'm sorry. I just need to make sure before I say the wrong thing. Tom, good afternoon. It's good to see you, my friend. Where can we find earnings reports for things like MPHO? You don't find earnings reports for NASDAQ because NASDAQ is obviously it's a group of stocks. So there isn't just one earnings reports, but you can go on. Actually, I don't know. I don't know if the stock box has earnings. I would assume the stock box has earnings. So go and buy the stock box. If it doesn't, and I'm talking rubbish, you can go to Yahoo Finance, which if I can spell it properly, hold on. Yeah, here. So Yahoo Finance. I don't do stocks, by the way. I'm not a stock person, so I don't even know my way around this site. But yeah, you'll find it here somewhere. I don't know. Be markets. Maybe stock. I don't know. It'll be on Yahoo Finance somewhere or Stockbox. Max, you passed it. Amazing news, my friend. Congratulations. Royal Trades, good to see you as well. Hope you're doing good. Euro New Zealand and pound yen. Sure. What was first? Euro New Zealand. I've got about 10 minutes left, ladies and gentlemen, so I won't be here for too long. Euro New Zealand looks ready to come lower on this weekly time frame. I mean, actually, hold on. Hold your horses. I'm not sure. When I had a quick look then at a glance, it looked like it was ready to come down because we're pushing this Bollinger Band. We failed to break the previous high here, but it's kind of been following the same behavior where, yes, it's pushing the tops, but it's sort of drifting up. So hold on, let me just check. Let me check the central bank, the RBNZ. What are they doing? So they're neutral to hawkish. RBNZ holds OCR steady after prior cuts, signaling cautious wait. Signaling a cautious wait amid easing inflation, trade uncertainties. Focus on inflation data. Okay, so it's reasonable. I think it's fine, but I would really be playing this mainly on the back of a weaker euro rather than on the New Zealand front. But you are selling, if you were a seller, you are selling a very strong trend here. So as a trend follower, I'm more inclined to wait for data or wait for the data to come out, like the inflation data, see if we can get pulled back into this 200 and just buy. I think that might be the most simple way. At least then you're with the drift of this market. I think, yeah, I really think that might be the most simple approach you could take there. DC TAM, GJ. We did already cover GJ, but I'll just do a quick recap for you. So I want to be a seller, mainly benefiting from, mainly taking advantage from a weaker pound. So if we just take a quick look here at the economic heat map for the UK, it's looking a bit dicey. Yeah, it's not looking healthy, really. We do have a score of 50, so yeah, maybe it's not as bad as it. Oh, sorry, maybe it looks worse than it is, or whatever the saying is. However, GDP missed, came out at negative 0.1. Forecast was 0.1 or positive 0.1. However, previous was negative 0.3. So there is that. It's a slight increase, but it's still negative, which isn't good. Manufacturing PMIs are okay. Services PMIs came out 51. Actually, you know what? It's not as bad as I thought it was. Now I'm actually reading it out loud. 51.2 is not awful. It's still above 50, although it's obviously a decrease. So it's not great, but it's definitely not awful. Retail sales came out at 0.9. CPI came out at 3.6. Interesting. Okay, so what I'm seeing here actually is the data isn't as bad as previous. It has done better, but the main thing that's dragging it down on the EdgeFinder is the fact that it missed forecast. So obviously GDP better than previous, but still worse than forecast. So if you don't know how this works, the surprise box here, which is a big driver for the markets, is how much would it beat or how much did it miss, is obviously still out of whack here. So yeah, not great. So I'm still bearish pound, just to emphasize, but it's not as dire as I thought it was. Yeah, Max, try and milk the prop firm for everything you can. Obviously you would. I don't think I need to tell you that. So euro pound, I'm still in this position. This has been going on for a long time now. I've been in in fact, almost 2 months. 2 months of swaps. It's quite nice. So yeah, I mean, this was very similar to the sort of idea I was explaining about me being relatively bullish on the dollar, but cautiously bullish. So I was quite happy to sell euros because I think euro is overvalued. Even the ECB was saying they're a little bit cautious about the euro. So I was happy to sell euros. Put a final sell, and this was the last sell I could afford before I started having to consider cutting the losses, or did have to cut losses, which was right at this previous high here. So yeah, we're coming back down to average price, so I'm almost out of this position. But average price is slightly wrong, actually, because obviously, like I said, I've been collecting almost 2 months of swap, well, over a month of swaps. So actually, the average price is slightly higher, but it is what it is. And then we've got pound dollar that I mentioned earlier that I was looking to sell here. I got sell limit, but never got tagged in. So a little bit sad, but that's really it, actually. Just trying to think if there's anything else. I don't think there is. Let's do a quick check up on the dollar after the news. Pretty flat, really no effect, to be honest with you. Dollar remains stable. The weekly does seem to be now coming into the expansion zone, and the expansion zone is purely my own discretional analysis. This isn't based on any models or mathematics or anything like that. So the way I found the expansion zone here, or the way I decided an expansion zone, is just following the past decade of price action. So obviously we have expansion where the dollar is doing very, very well, then contraction where the dollar is either ranging or pulling back. So you can see expansion, contraction, expansion. It just goes in cycles. So I viewed this as a contraction period, and we came to the bottom of the trend line, and now I'm expecting sort of an expansion period. But what's going to drive that? I don't know. 2 months of positive swaps. Not actually 2 months. I was kind of exaggerating 2 months. I've been in the euro pound trade or pound trades since the 11th of June. So actually, I mean, it's not 2 months, but it's also over a month. So I just said 2 months for ease, but yeah. Just trying to have a quick thing. Let's have a quick look on gold. Still nothing. Yeah, nothing going on in this market whatsoever. I suppose you could argue buyers are slightly in control here. We are seeing a little bit of sort of higher lows, but nothing. I mean, I think even that, I think he's been a bit too generous. I think that this market is just stuck sideways waiting. Last week, I was basically saying that I wouldn't want to be a seller because I don't want to really try and fight this trend. But I also don't want to be a buyer because I just don't really see much of a reason to be a buyer in gold right now. And it feels, and this is just gut feeling and sort of just price action, it just feels like this market is waiting for something to happen because everything's priced in. You know, what really is there going on at the moment? Well, there really isn't anything. All the wars are priced in. The rate cuts and rate decisions are already priced in. Or the you know, what we can expect from the Fed is priced in, I should say. So yeah, what is there to do? From an investor's point of view on gold, it's like, well, there really isn't that much. So we're just going to wait. We can take some profits when it gets to highs. We can buy some more when it gets to lows. But yeah, that's kind of it. Playing ping pong. So until we get either a dovish Fed, a hawkish Fed, or you know, the dollar starting to or the dollar continuing to weaken or strengthen, kind of just waiting. It's a waiting game. Oil. I was interested in oil. I was looking at it. I can't remember when, actually. I was looking at it not too long ago because it was on the EdgeFinder, I think, not too long ago. Excuse me. And it still is. But I just couldn't justify buying it down here. I just didn't feel very comfortable doing that. And in hindsight, maybe I should because it would be quite a profitable trade at the minute. But yeah, oil could be quite a strong play if you could get an entry. Let me just make sure it's still a bullish reading. It is. It's actually gone up. It was 7 now. I think it used to be 5 or something. So we've got an extra tick there in the oil box that we could look to buy into. I think if I was to buy, I'd need to see price clear this 200 moving average. I don't want to buy into it. It's a daily 200 moving average. So I personally put quite a lot of respect on the daily moving average. So I would like to see it break above, hold above, and then I might start being a buyer in that market back into sort of the previous high. I don't think there's anything else. Silver is still on the watch list. I'd still love to be a buyer in silver. But again, it's just still too overpriced. I really need to see it come back down into these highs. Worst case, we come back into these lows and I could be a buyer there and sort of average my way in. But right now, I can't do anything with this. It's just too high. So yeah, I need to wait for a better price. Yeah, that's kind of it. Guys, is there any questions? If not, I'll call it a day and I'll leave you to enjoy the rest of your days. because I'm pretty much done. You've seen my watch list. You've seen my spectacular euro-pound trade. That's it. Sweet. It doesn't seem like there's anything coming through. So guys, I will leave you all to it. Enjoy the rest of your days. Don't get margin called, and I will speak to you all tomorrow. I think I'm on tomorrow. Speak soon.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.